Welcome to BT Podcasts. In this episode, find out how family offices can successfully navigate the private equity market during volatility and economic uncertainty. This podcast is produced in collaboration with Moonfare.
As the wealth landscape rapidly evolves across Asia, the region is experiencing a notable proliferation of family offices, which are increasingly seeking access to institutional quality investment opportunities that have traditionally been difficult to reach. What are the challenges facing these family offices? What key considerations should guide their investment decisions in this high-growth but complex space? Welcome to BT Podcast from the Business Times. And joining us today with expert advice, Adam Banks, Head of APAC at Moonfare. Adam, thanks for your time.
Thank you. It's a pleasure to be here.
So Singapore seen a significant increase in family offices. How does what you do specifically cater to the unique needs and investment mandates of these family offices? Because they want access to private markets, I hear.
Yeah, that's right. The influx of family offices into Singapore has been quite dramatic. In 2020, there were around 400 family offices here in Singapore. If you fast forward to the end of 2024, that was more than 2,000. So that's more than a 5 times growth rate over that 5 times period. And I think that's going to continue compounding going forward. I think that's for very good reason. Singapore is a very sensible place to establish a family office today. Geographically, it's very well located within the APAC region. Politically, it's very stable. There's a favourable tax environment here. It's English speaking. And the MAS has rolled out specific incentives for family offices to set up shop here. You know, within private markets, JP Morgan estimates that 86% of family offices already have exposure to private equity. Within that, their average allocation to alternative assets is about 40%. So the opportunity is very clear. At Moonfare, we're generally dealing with investors with some level of sophistication within private markets. So as a minimum threshold, we're working with accredited investors. The average profile of the high net worth individual allocating 100 or 200K to our investments is usually a mid to senior level professional within banking or private equity. So our product resonates to a range of different investors, but our value proposition is definitely resonating best with ultra high net worths and family offices. We're a pure private market specialist. Private markets is really within our DNA. Our founder, Dr. Stefan Pauls, he's ex-KKR. I've spent all of my career pre-Moonfare working in-house at large GPs. Our investment team have similar backgrounds. So we're very well positioned to be a partner to family offices for their private markets programs. Specifically for family offices, Moonfare Private Office, in order to qualify for that program, you need to commit to investing a minimum of $5 million US dollars or euros with us over the first 2 years. What that gets you is a true white glove service offering, dedicated relationship manager who will give you a very tailored and customized onboarding flow. You get access to a much more granular level of underwriting information so you can truly underwrite investment opportunities through the lens of an institutional investor. In addition to that, there are customized fees. They get priority deal flow and they get access to things that don't get opened up on the main platform. So I think that model resonates with family offices all the way from small family offices that have no existing private markets exposure, all the way through to very large institutional family offices. Regardless of the size, we can offer access to things that investors aren't able to get through their incumbent intermediated or direct relationships. And for the very large family offices, we can be a very complementary deal sourcing channel.
How do you go about curating these institutional quality private equity opportunities? I mean, what sort of strategies do you use? Because they're traditionally out of reach for many family offices.
Absolutely. The really important point to make is not all private equity is created equal. So fund selection is really, really critical, both to delivering alpha as well as mitigating downside risk. There can be a 20% IRR spread between a private equity fund in the top quartile versus the bottom quartile. Even if you're looking at the median quartile, there can still be a 15% IRR spread. So picking the right managers that are consistently landing in the top quartile or the top decile is really, really important. Manager selection is also very important. And what I mean by that is developing long-term relationships with GPs. We're managing a book of more than 300 GP relationships. But importantly, we never pick a fund to go on the platform just because we have a relationship with the manager or we're getting paid. For every fund that goes on the Moonfare platform, we run an institutional data-driven due diligence process To date, over the last decade, we've reviewed around 5,000 funds. We've done in-depth due diligence on only 300 of those, and about 120 of those have been approved by our investment committee. What we're generally looking for when we're selecting these funds is either consistently top quartile or top decile performance within the manager across their fund series. We're not just looking at IRRs, we're also looking at TVPI, DPI, and a range of other metrics. We're generally looking for a minimum of 3 prior fund track records so that we can see whether there's consistency through their track record rather than just luck or timing. And importantly, we're not just offering large cap managers. So through intermediated channels today, access to large cap GPs, so brand name managers that everyone's heard of like Blackstone, KKR, Carlyle, is becoming more common. A Moonfare, where we're spending a lot of time, is trying to originate what we call hidden gems, and we're finding those in the mid-market and the lower mid-market. That's where we think you can deliver unique alpha and also where we're providing differentiated access. We have a first mover advantage in this space. So we've been around for almost a decade. We're the world's largest direct-to-consumer platform for private markets investing. We're owned by Fidelity, Vitruvian, Insight Partners, and obviously our team have very deep and broad networks. So we have a very deep sourcing channel. But I think also our scale is very important. Given how long we've been around, we have conviction that we can raise very big feeders very quickly. So some of the funds that we've invested in are north of 200 million. When we're looking to work with a GP on a fund that's very oversubscribed, they want to see proof that you've been able to deliver on the fundraising performance and you've been able to do that consistently. So I think that really gives us the edge when we're trying to originate these opportunities that are typically out of reach for others.
Talk to us about Moonfare's digital infrastructure, though, which would help you with these naked eye exams that you guys do, because you talked also a bit about those high minimum investment thresholds that challenge some family offices and also those underwriting deals. So how does the infrastructure address these pain points?
I think the value of our tech platform and digital infrastructure is evolving meaningfully. We provided access to institutional quality private markets opportunities from as low as $25,000 per fund. Now, if you go direct to a GP, it can be 10 to 20 million. So we're meaningfully dropping the barriers for access. In terms of the digital infrastructure through which people are investing, we make it very quick and efficient for people to access these funds. We reduce the operational burden of having to fill out endless paperwork. We reduce the administrative burden. The investment process is fully digitized. In fact, from creating an account on the Moonfare platform through to signing subscription documents, it can be as quick as 15 minutes. If you're thinking about family offices with very complicated offshore trust structures, naturally that can take a little bit longer, but we're meaningfully improving the efficiency of that process. We're looking to become much more AI native as a business. So we are beginning to roll out very valuable tools specifically for sophisticated investors, portfolio construction, cash flow forecasting, portfolio analytics, and it can also help investors to gain insights from other investors within the Moonfare platform. Specifically over the next 3 to 6 months, we're going to be rolling out a range of new features, and these are going to help investors manage their cash flows in a very, very sophisticated way. Liquidity management is one of the biggest pain points that I hear about when I'm talking to family offices. So our platform and the tools that we're rolling out are going to help investors optimize their portfolios for that.
What about what else differentiates Moonfare's approach to deal flow and co-investment opportunities from other platforms emerging in this private market access space?
Fundamentally, we're quite different to specifically other digital platforms. So we've done more than 120 third-party funds on the platform. And some of those feeders were a big LP north of 200 million. What that gives us is a very valuable proprietary data moat. It allows us to build very deep relationships with GPs. And interestingly, from being an investor in those funds, it gives us very organic access to co-investment deal flow. That helps to fuel deal flow for our own co-investment strategy, as well as direct deals that we launch on the platform. I don't see this being done anywhere else, so I think it's quite unique. When you look at other platforms and intermediaries, in many cases, and particularly the smaller ones, they're using third-party structuring providers to set up the infrastructure to invest into these funds, and then they use their marketplaces to access the deal flow. It's very mass market. A lot of these platforms are competing with each other because they're launching the same strategies. The beauty of our model is we're not limited in any way. We're building direct relationships with GPs. We're structuring our own feeders. In most cases, they're Luxembourg domiciled AIFMD compliant structures, so very family office friendly here in Singapore. We're really operating like a true institutional limited partner with the same screening process, the same investment committee process, and the same flexibility.
Still to come, what trends are emerging with regard to accessing private markets, especially since access to private equity is being democratized. More with Adam Banks from Moonfare in a moment.
And now back to BT Podcasts in collaboration with Moonfare.
Welcome back. Adam, how's Moonfare leveraging technology to enhance transparency and provide comprehensive due diligence support for family offices evaluating private equity investments?
Today, the tech aspect of our platform really helps to disseminate and summarize a very broad range of information in an incredibly efficient way. We offer a range of due diligence materials. We offer fund pipelines, GP webinars, educational materials. Everything is neatly presented at a high level, and investors have the ability to dig as deep as they want within a few clicks. Obviously, for our family office investors, we provide a much more granular level of underwriting information, and all of this is readily available via our digital platform. Going forward, we're going to be rolling out some more sophisticated tools, both to help our investors analyze new opportunities, but also as well as running analytics on their existing portfolios. And I think that will really help take our platform to the next level. In terms of transparency for investors and the range of material we can share with them, we're already integrating AI into our investment process. That allows us to handle a much larger pool of information and data, and it allows us to organize that in a way that it can be shared with investors very efficiently.
What about cross-border investing? Does the platform help with that, navigate those regulatory complexities for Singapore-based family offices?
Absolutely. Look, Moonfare's a global business. This is extremely beneficial from a sourcing perspective for APAC-based family offices and other investors, as they can use Moonfare to have an offshore, on-the-ground deal sourcing engine that's deeply embedded into the local markets in which these funds are investing. Our investment team has sourced a range of lower mid-market strategies and mid-market strategies that are delivering aggregate IRRs of 40 to 60%. These funds are highly oversubscribed. They're very, very difficult to originate if you're sitting behind a desk in Singapore without having extensive relationships in these given markets. Northern Europe is one of them. So I think investors can really lean into having that outsourced team to help originate and underwrite these truly unique investments. When I look at the other intermediated channels and the opportunities that investors have via those channels, generally these channels are offering large cap, well-established managers, the ones that everyone has heard of. This can be very good for forming a very stable part of your portfolio, but we're using our extensive experience and resources to identify these hidden gems that we think can deliver alpha for investors' portfolios. From a regulatory perspective, we're fully licensed by the MAS here in Singapore to distribute our products. So we don't need to rely on reverse solicitation, which many managers that are not based in Asia need to rely on to access the market here. In terms of our fund structures, in most cases, they're Luxembourg domiciled, AIFMD compliant. We also have Delaware structures for our US investors. All of these are very tax efficient for investors, both individuals and legal entities that are looking to access our products and are investing from Singapore. We also engage tax advisors to do tax analysis, both for individuals and legal entities in all of the markets in which we operate. This information is readily available via the Moonfare platform. So investors have the information that they need to assess whether it's efficient for them or not.
Boy, it's already sounding a bit sci-fi. Resistance is futile. What trends do you anticipate, though, in the evolution of private market access for these high net worth individuals and family offices over the next few years?
I think there are two key areas worth noting that are rapidly gaining interest and traction specifically here in Asia. The first one is semi-liquids. So these structures are fundamentally changing the way that investors can access institutional grade private markets opportunities. We're right at the beginning of that movie. Right now, however, there's still very strong demand for access from both individuals and family offices that can't invest directly with GPs into institutional grade closed-ended funds. The main reason for that is the semi-liquid fund space is still largely untested, and that's specifically in the case of private equity. I think for credit, infra, real estate, these are more cash flow generating and more mature strategies. Whereas for private equity, we're right at the beginning of this transition. The private equity semi-liquids that are available in the market right now tend to be kind of fund of fund style investment strategies where they're dipping into different buckets within the given GP. And you're getting a very diversified range to deals across venture capital, growth, private equity, large cap, mid cap, secondaries, and that all blends out to a kind of mid-teens return. Sophisticated investors are looking for much more tailored exposure, and that just doesn't cut it in most cases. I do think, however, we're going to see the semi-liquid landscape evolve meaningfully, and in the not too distant future, we'll start to see semi-liquid funds of all closed-ended strategies that are being offered by GPs. And along this transition, importantly, I think you're going to see more institutional capital flowing into these structures. It's not just going to be limited to private wealth. Secondly, blockchain is a very interesting topic. There's a lot of noise around blockchain, but I think the underlying technology is very interesting. You're already seeing some firms tokenizing access to private markets, but it's still very early days. I think also there's still a bit of a dark cloud hanging over blockchain from crypto. Many GPs are hesitant to take on the adoption risk, but it's encouraging to see regulators like the MAS launching studies such as Project Guardian to further explore the potential for blockchain within private markets. Now, in terms of both of those initiatives, Moonfare is taking big strides in both directions. We've developed our proprietary range of semi-liquid strategies, and we will continue to broaden this. We're also now adding third-party semi-liquids to the platform, but we're being very, very selective with the strategies that we work with. Where we do provide access to semi-liquids, we want to make sure it's truly institutional grade. So there's a very rigorous screening process being done in that space. Regarding blockchain, this is an area that we've been interested in for some time. It's too early for us to make more of a comment on this in detail, but it's definitely something that we'll It's definitely something we'll spend more time evaluating going forward.
So how does Moonfare balance, though, the need for democratized access to private equity with maintaining that exclusivity and quality demanded by your ultra-high net worth clients?
Ultimately, we're not targeting the retail market today. We're not trying to be a mass market business. We are private market specialists, which are delivering institutional quality opportunities to sophisticated investors. I don't necessarily think that sophistication needs to be determined by portfolio size. We have investors doing 100K commitments with us and maybe smaller portfolio sizes. These are very experienced investment professionals that are working in top tier GPs. So as a rule of thumb, I do believe we're catering to an audience with a certain level of experience within private markets as a baseline. Where I think we're going to see most growth for the business going forward is undoubtedly within the ultra high net worth and family office segment. More than half of the AUM that we've raised in Asia this year has come from Moonfare Private Office, which is our program for family offices. And that's no surprise given how well our products and offering resonate with this channel and how limited their options are elsewhere in most cases. In terms of how we cater specifically to this segment, we're already offering this different level of service, rate cards, onboarding flow to family offices and ultra high net worths that qualify for this program. They're getting access to specific funds and co-investments that are not listed on the main platform for broad distribution. Examples of these are Founders Funds. That was a manager that we only offered to Moonfare Private Office on the platform this year. We also provided access to direct deals like Anthropic, access to tailored events. They get access to the private office community, to the families that we work with, love being introduced to other families, both here within Singapore as well as in other parts of the world. So we're already catering to these investors in quite a specific way, and that's really what's propelling the growth across the whole business.
Adam, I wish we had more time. Thank you so much for your insights today.
Thanks, Howie. It's been a pleasure.
Adam Banks, Head of APEC at Moonfare. I'm Howie Lim. This has been BT Podcast by the Business Times.
This episode of BT Podcasts was produced in collaboration with Moonfare.
This is a podcast by the Business Times. Find more BT podcasts at businesstimes.com.sg/podcasts or wherever you get your podcasts.